Hello, this is Siwing Yi, and today is a very important update from Redfin. Before I begin, please, when you receive value from this video, please smash the like button and also subscribe to my YouTube channel. Without further ado, this is a very important update by Redfin. Spring home buyers season kicks off with steady demand, but lack of listings holds back sales. I've been reporting this for the past 9 months. Every week, every month, everything's decreasing. Pending sales is decreasing. Active listing is decreasing. New listing is decreasing for the past 9 months, especially as a result of the higher mortgage interest rate that started back last June of 2022 until the first quarter of this year, 2023. So all these trends clearly indicate there's a crisis, there's a crashing of the inventory. So I'm not surprised. Let's go over this very important article. The yellow highlights is something I want to talk about. Redfin said limited supply is another barrier for buyers who are competing for the few homes on the market. Demand is likely to swing up and down based on fluctuations in rates and availability of homes on the market. I need to pull this up with the Mortgage News Daily because as of today, there's some significant downtick on the mortgage rates. And here it is. Look at this. 30-year fixed rate mortgage as of today, 24 March, Saturday. 30 fixed rate for people with good credit, according to Mortgage News Daily, is 6.38%. And for VA buyers, 30-year fixed rate is 5.75 and FHA rate is 5.70. Couple of things I will discuss. Here's the 30-year mortgage rate. Is very, very significant. It has dropped down to 6.38% because during the peak October, fourth quarter 2022, we have seen 6.4. The past 9 months has been really crazy. The demand has dropped off significantly because of the higher mortgage rate. The first quarter of the year, we have seen 7.2% mortgage rate. For the remaining quarter of this year, 2023, there was some optimism. In February, we have seen rates drop down to 5.5% mortgage rate, then went back up again. It was way back up to 6.7%. Since the banking crisis occurred last week, the mortgage rate has continued to decrease to 6.38, which is very significant. Let's get back to the article. It says, tight supply. New listings of U.S. homes for sale fell 22% from a year earlier. One of the biggest declines since the housing market nearly ground to a halt at the beginning of the pandemic. Okay, so this is the tight supply is very significant. Sellers, we all know, one of the biggest declines. Sellers are reluctant to sell right now for the past year, really, because they want to hang on to their low mortgage rates. Nearly all homeowners have a rate of less than 6%. 40% of the homeowners have no mortgages, and the remaining 60% have home mortgage of less than 3.5%. They are locked in. They're not going to give up their 3% historically low mortgage to move up as a move-up buyer to buy a house at 6.5 or 7%. You really have to entice those homeowners that have these low mortgages at this time. Let's read on. Buyers right now are struggling with the low inventory. Look, every spring, every year, we have very elevated buying activities. That's happening for many years. I say it again, the beginning of the year is always a lot of housing activity. And this beginning of the first quarter of 2023 are no exception, even with the higher mortgage rate. So let's go on. Because there's so little inventory of houses to choose from, home buying speed is picking up even while rates stay high and demand remains low compared with last year. But again, 6 to 7% mortgage rate are not scaring people anymore. This is the new normal. Buyers right now, they have lowered their expectations, and even though a lot of people cannot afford to buy a home these days because of that rising home prices in past few years and the mortgage rate, we still have sufficient buyers to go after the limited inventory. This is what's happening. Sellers are struggling with low inventory because there's so little to choose from. buyers' speed is picking up while rates are staying high, and demand remains low compared to last year. Nearly half of the homes that went under contract had an accepted offer within 2 weeks of hitting the market. Lack of inventory is causing homes to sell faster than expected when buyers are contending with 6% plus rates. We are seeing in many markets throughout the country, a lot of those hotspots that I've seen, the lower entry-level homes, the homes that are below medium price, if they are listed correctly, if they are turnkey in a good area, they sell very quickly. We're seeing many bidding wars and offers, nothing crazy compared to 2021 peak, but we're seeing 3 to 5 offers per house. We're seeing 5 to 10% of houses that are sold above list price. There are plenty of serious buyers out there, but there's not enough inventory, said San Jose Redfin agent Angela Langone. Anything that comes on the market at a decent price in a desirable location is getting multiple offers. This is insane. Look at this. It's truly amazing. Competition could pick up more as we enter spring if mortgage rates stay close to 6% than 7%, which is more likely after the Fed's announcement. What this tells me is that if the mortgage rate, which is right now 6.38%, we're going to see uptick in mortgage applications. We're going to see more buyers getting off the sidelines. Anytime the mortgage rate are in the low 6%, we're going to see a lot of activities moving forward. Or conversely, if the mortgage rate are in the mid to high 6s, then we can see some slow activities. Mortgage rates are unlikely to increase again unless the next inflation report is worse than expected. Fairweather continued, which is the assistant chief economist of Redfin. She said, sideline buyers should be on high alert. This is the takeaway, high alert. Sideline buyers should be on high alert in coming days and weeks, which could offer a window to lock in a rate closer to 6% than 7%. People are really motivated. People are pulling the trigger and they are ready since last year. It's just last year was not the right time. The winter of last year, the holidays, people are just taking or relaxing, but everybody knew the spring buying season is going to be hot. The minimum home sales price was $368,420, down 1.7% from a year earlier. So if you look at the national real estate market, it's very hyper local, but the home prices from 2021 to 2022 is only about 1.7%. Median sales price increased most in the West Palm Beach, Florida, which is 12.7%, Milwaukee 11.3%, Fort Lauderdale 10.6%, Virginia Beach in Miami. No surprise, Florida is always in like half of the Florida metros are in the top 10 in terms of market growth, housing price appreciation in the past year. Florida is extremely hot. Our pending home sales are down 70% year over year. Pending home sales fell in all 50 of the most populous U.S. metro. Las Vegas fell 54%, Sacramento, Seattle, Portland, Riverside. You know what this telling me? This pandemic bull market, we all talk about them. We all ridicule them for having such a high elevated pandemic home increases. Now they are softening and the price is decreasing. Las Vegas and Phoenix and Boise and Austin, Texas. But those areas are really picking up. We're seeing multiple offers in those markets, especially the entry-level, lower price homes. I believe those markets are rebounding this year, especially the mortgage rate is at low 6%. That's my opinion on it. See, same thing. Everything is declining because sellers are not selling. People are locked in the historic low rate. They're just not going to move. New listings have declined in almost all the 50 most populous metros as reported by Redfin. And finally, look at this. Now, monthly supply, 2.9% current monthly supply. 5 to 6 months is a normal, healthy market where supply equal demand. Economics 101, if demand is higher than supply, which is the case. If inventory level of supply is less than 5 to 6%, it's still seller's market. So in this case, 2.9%, which is right here, once the supply is almost at a historical low. Because during 2021, which is a historical once in a lifetime, once the market back in 2021 was for supplier inventory 1.9%, which is unheard of. Now it's 2.9, which is extremely historical low. You must understand that. 46% of the homes that went under contract had an accepted offer within 2 weeks of coming to the market. Things are really heating up. Let's finish up with the graph. Median price was only down less than 2% year over year. Anybody that are saying houses are going down dramatically or not correct, because here it is. Year over year, look at this. March 19th, the median home price nationwide is 358, only down by 1.7% from year over year from March 2022. You see all the high house appreciation in the past 3 years. In the pandemic, still very significant. Median asking price is up 1% year over year. As you can see, this orange line shows home prices increasing so far in the first quarter of 2023, and pending sales is down 17% year over year, because once again, sellers are not selling. New listings down 22%. All this lack of sales, pending sales decreasing, is causing supply of homes to be very limited. That's what we're seeing. Anybody calling for a housing crash, they are wrong. Right, 2.5% supply inventory is going to be a amazing frenzy. Many big wars, many multiple offers. Imagine that's pretty much it. I have to say the price shock is less and less, and things are really picking up. I could say, if the mortgage rate decrease below 60%, we're gonna have an amazing hot frenzy of buyers coming into the market. So there's a lot of urgency involved. The takeaway is this: the housing market is picking up, especially with the mortgage rate is less than low sixes. Buyers getting off the sideline and more and more competition. That's what's going on. So stay tuned. There's more information. Things getting hot. A lot of people getting off the sideline to grab up the limited amount of inventory nationwide. Hopefully this helped. If you receive value from this presentation, please smash the like button and subscribe to my YouTube channel. And also, please quickly visit my website below and drop your email into the form to subscribe to my weekly turnkey real estate investor newsletter, because once you join the network, you will receive weekly market updates, investment opportunities, real estate education, interview with top industry leaders straight into your inbox that you won't find anywhere else. Also, drop the comments below. Tell me, share with us where you're from and what is your goal or your primary home buyer to try to buy homes. Because I'm very knowledgeable about many different markets, although I'm a real estate investor, I help guide our investors to buy affordable markets in the US. I have a high level understanding of many markets over 20 years. Drop comments. I'm more than happy to answer back. Thank you for listening, and I'll see you on the next update. Thank you so much. Have a nice day. This is Shiva. Bye-bye.